Well, hello, folks. I'm L.A. Little, and this is your weekly NeoTA wrap. Where we take a look at these markets, and we do it from a neoclassical perspective, each time asking ourselves what happened last week, and what does it tell us about the coming ones. I do this show every Sunday night. It's broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. You can get it there anytime, any device. And most conveniently whenever you want. So market wise, I wish we could get the markets to do what we want when we want versus having to try to read what they're doing and simply make the best of it. Last week, my take was that we were going to fill out some sort of a top of a range, and that wasn't the way it was because the whole market really just shot forward pretty much all week long. There was a little bit of a pullback on Wednesday, but then Thursday right back the other way. Biggest week in probably 2 or 3 years in terms of percentage gains. Of course, this comes after huge losses, but here they are back up, 6.3, 7.4. Russell's only 4 down, and the Dow is up on the year again. So that same scenario we've seen before where these markets seem to have a way of simply doing V-shaped reversals back to the top side seems to still be the general prognosis. Anytime you get a dip, you might as well just trip in there and buy it because it's going back the other way. Here's the daily chart. 2 or 3 things to notice. One is, remember, we had the retest regenerate here. It was bearish. We tested into the bottom of it on Monday. Tuesday blew over the top. Wednesday came back and tested the top of that zone. And then Thursday, Friday, back to the upside. So now, where's it going to go always becomes the next question. Your swing point high sitting here. What that tells me is more than likely this is going to be the congestion area where it tries to stop. That means we're going to test a little bit higher here to start with, maybe at the beginning of the week, given the momentum. And then potentially that becomes the top. Potentially this area, I would probably take this prior swing point low, draw it down maybe into here. Maybe this becomes the range on the way back. Now, you can see support zone here, so that could be kind of the pullback area into somewhere into this zone. On the top side, these resistance zones up here, these are the critical ones. I mean, if this thing's truly going to do the V shape to eternity again, where we come down and we go all the way back to new highs, if it really is going to break out new highs and do it in a one-legged move, this is the area that you got to get over. And if you get over this, there really isn't a lot above it. I mean, you got a big volume high here off of this, but off of that. But other than that, I mean, there's just not much up there, folks. So, if it wants to go back and test this immediately, straight off of this move, all you got to do is get over this area, because until you get into the bottom of this bar, there's really nothing to stop it. And so it's really the top of that one, top of this. But, I mean, come on. More seriously, you got to think somewhere in here, you're probably going to get some sort of a pullback to start this week. If I look at the weekly chart, we left volume at the lows. You have lows over here. Fast moves off the first move usually aren't the ones that kill you. It's the bounces that fell that kill you. And so as this thing comes back up into this kind of area here where there was prior pullback, and then this area here where there was a prior pullback, as you kind of come back up to this breakdown bar and this one, and that's kind of what we were just looking at, on the other chart. It's a little bit higher here on the weekly, up to about 1983. But as you come into this area, if you roll back over from here, that becomes more of a danger point. Now, I doubt that, given the kind of move we saw straight back up, I doubt that the rollover is going to take us all the way to the lows again. More than likely it finds support in here somewhere, and it kind of builds out some sort of a range over here until it either breaks higher or breaks lower. But that's rollover that eventually potentially fails and breaks you down. That's the one that can hurt you, because if that goes down and breaks these lows, now you're talking about breaks potentially on the monthly. And we haven't seen that in years. So, just realize that that situation is out there. It's going to take a while for it to happen, if it's going to happen. And it may not even happen. We may be sitting at new highs before the end of the year. It's just too early to know. What we can know is what happens on a shorter time frame, and we can look at that and see how that plays out. And what I'm thinking about when I say that is, if I go over and look at the NASDAQ actually got over that high that we just looked at on the S&P that it's about to test. It does it with suspect volume, so it doesn't have the volume here as it goes over this high, which is here. So you can see the difference, no contest. And it comes after this long extended drive higher. Now, if this can continue on, especially if and when it rolls, whether it goes up a little bit higher and then rolls, or whether it rolls immediately starting tomorrow, this is a retest regenerate zone now off the high, and it's a bullish one, right? This is bullish now. So where we had the bearish one before off of this swing point low that was broken, this area, once we jumped over that and kept going, now we've gotten over the high. Now we've got a bullish retest regen. So in other words, if it pulls back, light volume, and then proceeds up, then you can get some sort of a nice extension to the upside. And depending on how far it pulls back, you could either be testing the tops or breaking out. So that's the sort of thing you want to look at as the market eventually retraces, which I suspect it will this week. That's the sort of thing we want to look at and say, okay, how is it behaving as it comes back to key areas? Does it confirm, just like it did on the bearish non-confirmation, right, to go lower, in other words, to regenerate lower? So as it came back up into this area and failed to flip around and regenerate lower, as we come down, do we fail to push lower and instead regenerate higher? Which one's it going to be? If it actually got down underneath this, that would confirm even more so a longer range trade type situation taking place. And in that case, right, we would be looking for that range trade. If it does regenerate higher, then we're going to expand the range and potentially break out to the top side, but at least expand the range. And so I would be watching those markets where it has gotten over swing point highs to see how they retest and how they try to regenerate or fail to do so. And another place where we're going to see that's been key all year long is here on the Russell. And if we pull the Russell over onto the weekly, the good old Russell has baffled us once more in that it has pulled over on a weekly basis off of multiple swing point breaks. I mean, there were 4 of them, and if you count the initial one, there was 5. All of those swing point breaks, yet here it is back above them, at least back above the first one, and trying to push higher again. And so the Russell also, at least at this point, is pointing out that this is some sort of a range trade, not a continuation down, because it failed to regenerate lower so far. So as the Russell has told us now, range trade, I'd be curious to see how far it wants to push now that it has broken, and it's got all these other ones to go into now. Or does it, is it really just this one bar and then we're back inside of it and trying to head lower? Another key market to watch. So that's the indexes. Sectors, pretty much strength across the board. If I'm not going to go through all of them, but if you flip through the sectors and, if you look at, let's just start with the strongest, which is the IBB. You could look at the BBH. It doesn't matter which one you look at. They all broke the new highs. They broke here They broke the new highs on the weekly and broke the new highs on the monthly, and depending on whether the monthly holds or not, that would be all-time highs holding as well. Volume not great, but sufficient, greater than it was. Breaks out, confirmed bullish trend higher. That's a high beta spot, high beta sector. That tells you it's risk on, so they're pushing the risk envelope again. But it's not just here. If we look at the IYT, just like we were talking about the retest regen on the NASDAQ, you have a breakout here, suspect, but over the high. And so now the retest regen is here, and can it pull back and get lower or not? If it does, that kind of confirms it's going to be some sort of a range down here. If it doesn't, then they're going to expand the range up to the tops and potentially break them out. And so this coming week, these are the sorts of stocks, sectors, indexes, the action that you want to watch, as it does whatever it's going to do. Now, some of them are much weaker. For example, if we look at, say, the XLE, much weaker here. Yeah, it's bouncing, but it's struggling. If we look at the XLB, also into that swing point low prior one, but it's a struggle as well. And then, to make matters more confusing, you've got the safety sectors that are attracting money, like XLP and XLU, places you wouldn't expect the money to go to, but it is. And so that's kind of confusing, and we may talk about that some other time. But tonight I'm going to actually take the latter half of the show and talk about dollar strength, the emerging markets and the effect on them, and commodities itself. So we'll go to that tonight as a special. As far as kind of a synopsis here, if you think about what's coming up this week, the major numbers this week, of course, are earnings. You're deeper into the earnings season. Typically, these aren't quite as good. Earnings in general have been pretty good. They haven't been bad. PEs aren't that stretched given the earnings that have been reported. If you look at the economics that are happening this week, in particular, you got the Fed, and they're meeting on Tuesday, announcement on Wednesday. The expectation is they're going to finally end QE, which kind of segues into the special tonight where we'll talk about that. And then you've got the Japan meeting, I believe it's on Thursday or Wednesday night, it's announced Thursday morning, where they're expected to do nothing, but they may surprise us and actually launch another round of quantitative easing because they've got some serious problems. And, they've got to devalue the yen, and the best way to do that is to make the money more free. And so I'm curious to see what Japan does. Do they do more on the QE side? If they do, that's going to put even more pressure on Europe to do the same, and potentially China as well. And China is doing its best not to do too loose of monetary policy, but it's kind of having its hands forced by other countries. Britain last week said, hey, we're going to just continue QEing. And as you know, Draghi also doing the same. So all the world, with the exception of the U.S., seems to be doing more and more quantitative easing, whereas the U.S. is pulling back and not doing so, which is putting that underlying bid in the dollar, and which I believe is the major source of all the currency. This currency situation is the major source of all this volatility that we're seeing. So in a nutshell, I would think that you see a little bit more up, and then we're probably going to discover the top of that range, get some sort of a pullback, maybe a sell the news on the Fed or right before it, and then we'll do some sort of range type trading, filling out that range. Let's look at, let's segue over to the special now, and let's talk a little bit about the dollar strength, what it means, and the implications of it going forward. So if I pull up a 5-year chart using the UUP as a proxy, now if you were looking at 20, 30, 40 years of the dollar, what you'd see was that the dollar had been in a huge uptrend back in the 70s, 80s, and ever since then it's been going the other way. for the most part. And so you would see some sort of a chart where, the highs were way up here somewhere, and this thing had been, in this kind of a trend for a long time. Now you're starting to see a little different trend, and that is that if you go back here and you look at 2010, you got a spike up. In 2008, you got a spike up on safety as a result of the debacle that was taking place. Since that 2010, if you remember, that was the taper tantrum, where they came back out and did the twist operation, I believe, is what came out here. The dollar got sold off, but that fast move up was what brought on more QE. And then since then, we've had the dollar, going down. Now, here we are again, the dollar up here trying to break out again. You got a swing point high here it's testing, one over here that it also is testing. And if we look at a little bit farther over, there's a swing point high over here. So, and I'm on the monthly chart. So we're pulling up into multiple swing point highs on the monthly. Folks, if these break and we start to move higher, that's going to cause more currency volatility in equity markets would be my suspicion. And so if we look at the price points here, 22.98, the top of this one is 23.14, and then up here is 23.40. After that, you got to go all the way up to 25, almost 26. So you can see 3 points on this is going to be a big move if that happens. We're talking 10, 12, 13% higher, and I suspect if this thing does start to break, it's going to move fast again. So what does that mean to everything, though? We have talked about world markets under pressure. If we flip over and look at some of the world markets, they started showing, and actually before I flip there, let me go here and show you on a weekly. Actually, let me get the dollar up. I didn't have it up. Let me pop over the Ox markets and pull it up on a monthly and a weekly. And let's look at the weekly. Here's the weekly. So you went from 21.20 up to 23, right? So that's a 10% move in a month, 2 months actually. Yeah, a little over 2 months. Fast move, right? So remember the breakout. The breakout here was July, end of July. Now, let's go over to the world markets. And let's take a look at when these started to break. And we know that we've seen problems in these world markets. They were stronger than us, but now they're weaker. So that the end of July was when the dollar started to take off. When were the tops here? And let's put it on a weekly. So let me pull this out of the way and we'll just look at the weeklies. So the top here was what? August? So right after the dollar started to take off, the All Ordinaries topped. Let's look at India. India topped in right at September. So a little bit later, right? Another month. Brazil. Brazil tops in about 3 weeks later. And then comes off hard. Now all these came off hard. Just look at the pullbacks. Europe tops right about the time, right before actually the dollar really takes off. The DAX probably about the same, and that was right about the same time, July. China, the HCAP shares, when did it top? Well, of course it topped way back here, but I'm on the dollar. Wait a minute, let me go back. I thought I punched up China. Here's China. So China tops around September, so about a month later. And how about Hong Kong? Hong Kong tops about September, right? About a month later. You see the pattern, right? The dollar starts making the fast move, and right across the world, they all start to sell off. Is it a coincidence? I don't think so. And I've referred to it before, but I've never tried to explain, what I think is really going on. But I think a lot of it is you probably have a huge carry trade with the dollar. So in other words, you know, there's monies that have been pushed into the system, large amounts of money. Those monies have been, used to do a carry trade where someone invests or some investor takes and borrows from U.S. dollars, right, and then takes that and goes buys bonds, say in Thailand or in Spain or wherever they're paying more. So maybe his interest rate on his loan that he takes out here in dollars is 1% or maybe 2%. And then he leverages up 10, 20 to 1, and then he goes buy bonds where they're paying him 4 or 5%. Yet they're all sovereign debt that's government backed, right? So it shouldn't fail on him. And as long as that currency stays the same, he can still play that trade. In other words, he's going to make that 2% and then lever it up. So he's making 20, 30% on it. That's what's been done many times over the years. Long-term capital management that went bust in 98, that's exactly what they were doing. You know, the Asian contagion that happened in 97, it was carry trades that had to be unwound. And what does it mean to be unwound? Well, instead of pushing all that money, into those sovereign markets, in other words, buying that debt, it gets reversed and it all starts coming back out. And what does that do? Well, that puts a lot of pressure on those countries' currencies. And it basically devalues them, right? Because the dollar is getting stronger, they go lower, puts a difficult position in terms of current account deficits. And if the country wants to defend their currency, they either got to go into the foreign market and buy up their currency, prop it up, or they have to raise their interest rates. And so they're in this kind of a, if and when that flips around, which it started to do already and which it may do more of, that's going to put a lot of pressure on all those countries where they've seen those huge inflows. And if you wonder, how much inflows have there been, just look at emerging market debt and what it looks like. I mean, if you look at like Asia, look at the huge expansion of debt that's taking place in Asia, right? They're issuing these bonds. These bonds are getting eaten up, right? And just look at the debt explosion into Asia. That's Indonesia, that's China, that's, all the Asian tigers, if you will. What are they going to do if it reverses on them? And nobody wants this debt anymore, right? And that money reverses and that carry trade is unwound. It's going to put huge pressure on their currencies, which is going to put huge pressure on their equity markets, which I believe is probably what we're seeing when we look at these sell-offs that are starting to take place already. So that, to me, is the issue. And the other issue that one should recognize is that global debt is expanding. It hasn't stopped. It continues to go up, right? That debt expansion, as a result of quantitative easing around the world, that debt expansion is being malinvested most likely. In other words, if you push so much money in there, you're going to end up building office buildings you don't need. You're going to build factories you don't need. You're going to stockpile stuff you don't need. On and on and on. And at some point, of course, that drives economic activity while it happens. But if it really doesn't produce goods that the world needs, then it's just malinvestment. It's not going to help anybody. As a matter of fact, that debt's going to have to be serviced, right? Now, as long as rates stay extremely low, which is probably likely, they can continue to service it, but you don't have inflation that's going to eat it away. And so somewhere down the road, it becomes a bigger and a bigger problem. So, when I talk about these currency moves, fast moves in currencies cause them problems. If this dollar does start to take off again, and that push in the dollar, and I'm going to pull up the dollar here and we'll look at it again together. If that starts to take off again, and that push is like what we've seen before here. In other words, we consolidate here for a while, and then we do another leg higher, another 10% or 15%. That's going to put huge pressure on these, especially emerging markets, to defend their currencies. Their equity markets are going to get hit again, and it's going to be a real problem. So I think if I have to worry about something, I would probably be worrying about how that plays out over time. And do fast currency moves actually start up again? If they do, and this dollar does take off, I think it's going to be a problem. And so that to me is something that we probably should be watching. And historically, it has created significant market burps, if you will, blips on the market where, all of a sudden, and that's the one that's more of a sudden thing. You wake up one morning and, some large firm is going belly up, especially a hedge fund or something like that. It's going to go belly up, and if they're big enough, like long-term capital management was back in '98, they can rock the whole system. Or if you have another Thailand crisis like they did in '97, where the baht went crazy, then you can get a major kind of financial contagion that really puts a kink in the whole system for a while and worries everybody. Are we going to hit that? I don't know, but the fast currency moves is what usually causes those sorts of things. So it's something I would be looking at. Now, the other part of the dollar strength, of course, is the commodity weakness. And you see it across the board in almost all the commodities. I actually have a question from a viewer on one of those commodities, so let's hit that one first, which is oil. And then we'll quickly glance at some of the others while we're here. So let's start with the oil market. The question there was, is it going to hold the near term and try to bounce, right? So I'm on the weekly here. You had a spike down volume on it, now an inside bar on the weekly. You're way underneath the lows here on the weekly. If I pull the daily over, look at it, and you got the spike down here. Looks to me like it's going to try to test that again. If it holds, then yeah, you could get a move up. But if you're looking from a longer term perspective, like a weekly or monthly, and you're looking at this area and you're trying to time an entry with the ideal that you're going to push higher, you need some sort of big volume coming into this thing versus not. And right now, Saudi Arabia really is flooding the market out of deterministic drive to flood out or to shut out other higher cost producers. So they're looking at the long term and saying, 5 years, 10 years from now, we want to be the major producer. So we're going to try to bring the cost down low enough that we can blow out everybody else and make them go bankrupt. And then we'll be the only producer again, right? And we can force oil back up to where we want it. So I think that's the game that's being played here right now. Can it hold here? Yeah, it probably can if it comes down and tests again. But, are you going to get a larger move back to the top side? I don't think so right now. And unless you see money coming into this, I wouldn't expect that. If you go over and look at the monthly, right, on the monthly itself, you've already broken this swing point low. Once this month, flushes out, had volume. You're coming into the next one, you have volume. You got other ones down here at the bottoms, you don't have enough volume from them. Can you go down and test 29? Yeah, I think so. I don't think that's out of the question. So this huge range that's been in a place, for quite a while now, this area, looks like it's going to expand down into those lows one more time. Are you going to break them all out? I kind of doubt that. But then again, that would take place if you're down in this area and the economics turn bad, right? Then you would see this thing blow out the bottom. But I don't think we're there in terms of that. So do I think the support zone will hold, or do I think it's going to break under this area? I suspect it's probably going to hold for now. Eventually, you're going to test the lows, though. And I'm looking at the USO. I know you were looking at the questioner was looking at the oil itself, but this is a good proxy everybody else can look at. Okay, so turning to the other commodities real quick, I'm running a little tight on time here. If I look at copper, I want to pull these out and look at them on the weekly. If I look at copper, it looks like it's coming down to try to test the lows. If I look at silver, silver's trying to test the lows, right? Again, and if we put them on the monthly, let's just look at the monthlies. It's coming down to test all the lows on the monthly for 5 years. If I look at natural gas is coming down to test the lows again. If I look at anything in commodities, if I just go to the continuous commodity index, it's testing the lows, right? This is everything wrapped into one. So the whole point here is that dollar strength is going to continue to put pressure on commodities, and it's probably if we get fast currency moves with the dollar again, especially this next one if it happens, it's going to put enormous pressure on countries to defend their currencies, which is probably going to put a lot of pressure on their equity markets, just like we saw over the last couple of months. That's the risk with dollar strength. And how does the dollar get strong? It's the Federal Reserve, folks. Are they going to come out and keep it weak? Are they going to keep QE on the table? Nobody expects that. I don't either. I don't see how the dollar stays weak unless they say, hey, we're not going to raise rates for 2 years or something. And I don't think they're going to say that either. And so with the other policies, with Japan, with Europe trying to get weaker, I don't see any place the dollar to go except for to get stronger. And if volatility picks up, the dollar is going to get even stronger. Folks, thank you for joining me. If you want to share this with a friend, on Facebook, Twitter, wherever, you've got some buttons there. You can just hit them. Send it over. Let other people know about us. As always, I appreciate you helping me and me trying to help you. Take care. Until next time, I'm LA. This is and it was your weekly TA wrap. Have a great night. I'll see you next time. Good night, folks.